Here's one way President Trump can fight the Fed. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. There's a weapon that the Trump administration should unleash to begin a huge, much-needed overhaul of the Federal Reserve. The Treasury should issue government bonds linked to gold. These securities would provide a simple, everyday metric as to whether Washington is undermining the dollar's integrity or maintaining its value. Noted economist Judy Shelton, in her seminal book, Good as Gold: How to Unleash the Power of Sound Money, provides one model on how this would work. Washington would sell a zero-coupon bond with a maturity of, say, 5 years. Here's the profoundly positive kicker. At maturity, the investor gets to make a choice: get the principal back in dollars or with gold. For example, you buy a 5-year gold bond for $1 million. At maturity, the bond would permit you to get cash or a specific amount of gold, in this case, probably around 28,000 ounces. If Washington and the Federal Reserve misbehave, as they have in recent past, you might collect gold worth $1.5 million. Washington would set aside a certain amount of its 261 million ounces of gold that it currently holds to cover its potential liabilities. The beauty part is that people every day could see if Washington is messing around with the dollar's value. A weak dollar would mean Uncle Sam would lose gold. Instinctively, most people wouldn't like that at all. They would know this portends trouble. The price of these gold bonds would be a great barometer of the financial health of Washington. For a variety of reasons, gold keeps its intrinsic value better than anything else on earth and has for thousands of years. It is to stable value as the North Star is to navigation. It's a fixture. When you see the dollar price of gold fluctuate, that mainly reflects changes in the value of the dollar, not the yellow metal. These days, investors hunger for protection against inflation. That's why they have bought some $2.6 trillion of Treasury inflation-protected securities, so-called TIPS, even though the nominal interest rate is low compared to regular Treasury bonds. Gold bonds would also become a weapon against the very destructive philosophy that guides the Federal Reserve, the belief that prosperity causes inflation. The Fed fears that a vibrant economy will send prices higher. The central bank doesn't distinguish between expenses going up because of natural disasters, pandemic lockdowns, or government policies like sales taxes and regulations, and the classic inflation that comes when you reduce the value of the dollar. Judy Shelton rightly makes the point that we need to rule out central banks manipulating the cost of capital to stimulate or restrict economic activity. This socialist-style thinking needs to be attacked. Money measures value the way a clock measures time, a ruler measures length, and a scale measures weight. We all know that markets work best with fixed weights and measures. The Fed should focus only on maintaining the value of the dollar. It shouldn't keep trying to manipulate economic activity. It shouldn't manipulate interest rates. It's an absurdity today that a 3-month Treasury bill yields around 4.3%. A market rate would likely be half that. Gold bonds would help highlight how misbegotten the Fed has become with its true mission. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and I look forward to being with you soon again.